John Bogle's investment strategy, how to invest passively. The founder of the Vanguard Group and a leading advocate of index investing is John Bogle. Bogle, sometimes known as Jack, changed the mutual fund industry by developing index investing, which enables investors to purchase mutual funds that track the larger market. He took these actions with the goal of helping the typical investor invest more easily and affordably. Childhood and education. On May 8, 1929, John Bogle was born in Montclair, New Jersey. Since his family had lost the majority of their wealth in the 1929 stock market crash, his uncle paid for his tuition at Blair Academy, allowing him to attend. At Princeton University, John Bogle studied economics. In the beginning of his career, he joined Wellington Management in 1951 and made an effort to convince them to switch from concentrating on one investment fund to numerous. He finally rose to the position of chairman at Wellington before being let go as a result of a poor merger choice. He subsequently established Vanguard Group, his own mutual fund business, in 1974. Important achievements. Vanguard. With Vanguard, Bogle used a cutting-edge ownership structure in which the mutual fund shareholders became co-owners of the funds in which they made investments. The investment firm is owned by the funds, making the investors in the funds indirect owners of the company. Due to the firm's ability to incorporate any earnings into its operating model, fund investors will pay less for their investments thanks to this structure. The first index fund sold to regular investors was the Vanguard 500 Fund, which Bogle created in 1976 and mimics the returns of the S&P 500. A perfect fit for the provision of no-load mutual funds, which don't charge a commission on investment purchases, was Bogle's special organizational design for Vanguard. In 1976, when the Vanguard 500 Fund made its debut, it barely managed to raise $11 million during its inaugural underwriting. The fund is in charge of more than $709 billion in assets as of July 28, 2022. In 1999, Bogle announced his retirement as CEO and chair of Vanguard. The same year, he also published Common Sense on Mutual Funds, New Imperatives for the Intelligent Investor, which has since become a standard for investors all over the world. Legacy. The popularity of index investing, in which a fund keeps a mix of investments that follow a big market index, can be attributed in large part to John Bogle. Bogle prioritized strategies to cut costs connected with investing in mutual funds because he believed that regular investors would find it difficult or impossible to outperform the market over the long term. For instance, Bogle concentrated on no-load funds with low turnover and straightforward investment approaches. The underlying tenet of passive investing is often that an investor will generate more gains with a passive strategy that depends on funds with lower turnover, management fees, and expense ratios than a strategy that chases high market returns. Active investing, which necessitates managers to take a more active role with the goal of outperforming the market, contrasts with passive investing. Because they base their holdings on the stocks included on any given index funds fit this paradigm very well. The diversification represented by all the stocks on an index is an advantage to investors who buy shares in index funds. This guards against the possibility that a specific business would adversely affect the fund's overall performance. Since managers just have to make sure that their holdings match those of the index they follow, index funds also almost run themselves. Fees for index funds remain lower as a result than for funds with more active trading. Finally, index funds tend to generate higher tax-efficient returns than other types of funds since they require fewer trades to maintain their portfolios than funds with more active management strategies. By founding the Vanguard Group, one of the biggest investment management companies in the world, John Bogle established himself as a giant in the history of investment management. He pioneered passive investing through Vanguard, making it simpler for common investors to invest their money and create profits with minimal risk. The famed investors buy and hold for the long-term approach was straightforward but extremely successful. On CNBC's Power Lunch in 2018, Bogle, the creator of the Vanguard Group, remarked, "If you hold the stock market, you will grow with America." According to him, there is a strong long-term association between the stock market and the expansion of the American economy. Therefore, keep the course even when the situation is tense. Don't let these market changes, even significant ones like the financial crisis, take place. Never, ever be in or out of the market and change your mind. Maintain a set level at all times. Your emotions will absolutely defeat you if you attempt to trade in and out of the market, continued Bogle. Short-term betting is not the best course of action. In his book, The Little Book of Common Sense Investing, Bogle proclaimed that wise investing is all about common sense. Holding a diverse portfolio of equities over a lengthy period of time is a winning strategy. Theoretically, beating the stock market is a zero-sum game. There must be winners and losers, and if the significant costs of investing are taken into account, it becomes a loser's game. The most straightforward and effective investing plan, according to common sense and history, is to purchase and hold all of the publicly traded companies in the country at deeply discounted prices. He advised investing in low-cost index funds since they are widely diversified, own a variety of stocks, and have low operating costs. According to what he claimed, it is the only investment that assures you your fair share of stock market returns. Please subscribe for more investing videos.